Welcome everyone to the first trading day of March. And my goodness, no single day is starting without some sort of crazy move or surprise in the markets. Yesterday, I thought the world was going to fall off a cliff, all right? Or at least that's what I was told. And then now we're green. We're green across the board. We're green on IWM, we're green on the Qs, we're green on RSP, or like kind of teetering the RSP. And we're also green on SPY, but especially green on IGV, the software ETF. Software stocks are coming back, baby. And this is not only from a fundamental perspective, because I got to be honest, it got a little bit overblown. And I know I wasn't really buying the dip hard or anything because I would rather buy the recovery than buy a falling knife. But my goodness, some of these software stocks are up tremendously today, but not all of them. Some are pretty down. But what was really up the most today were drone stocks. ONDS was up 20%. KTOS was up, I think, like 17%. AVAV or AeroVironment was up almost 20%. But all that move is faded. What exactly happened? We're going to get a little bit into that one too. And also, we're going to take a look at some news as well. We had over the weekend, or at least last Friday, Anthropic came out and said they are not going to side with the government or the Department of Defense. And then Trump got a little bit upset and basically stopped and ceased all federal activity of using Anthropic. And now OpenAI and Sam Altman came by. They're trying to swoop in and take the spotlight from there. We'll talk a little about that one. And also, we're going to listen to what Steve Eisman has to say. Of course, the gentleman from The Big Short, the famous guy, also has his podcast, The Real Eisman Playbook, which is actually a really good one. I recommend that one. And a few more things here on the Solid Report. Welcome, everyone. March 3rd. What is going on? How are you? Yeah, that's right. Here, tapped. Let's go. Let's go. Yep. Crazy turnaround. I know. Seriously, man. What, Nick, what a crazy turnaround. Crazy. Yep. Samsolid. That is what, you know what? On this, didn't fall back as much as the other ones, but I think because we saw this rotation back into software, tech comes back. People took their profits and all the drone stuff that they held for a little bit with that comeback, and now they're rotating back. Doesn't mean that it can't have a comeback story. I'm going to talk a little bit about drone stocks as well. We'll take a look at that one. What is going on, everyone? All right. So the first thing we're going to talk about and specifically do is look at the charts here for software, because this thing is just off the wall right now. You know, let me get a little bit of Sam action over there. All right. So IGV here looks like it's making a comeback. Now, did this bottom? You know, I'll be honest, we need some confirmation here. We already had a couple of follow-through days here. We had one big green candle here. We had another big green candle today to make a higher high. And we're back above the 20-day moving average, which is really good to see in terms of the software ETF. But if we look under the hood at some software stocks over here, we have Klaviyo's up 6%, but that's because they did a major buyback. I was actually wondering why in the world this is up 6%. And then Shai told me exactly what it was. ServiceNow, which is probably one of the more top tier software stocks. And Jefferies actually came out and said that this is going to be disrupted by AI. Well, I highly disagree with you, Jefferies. It is not going to be disrupted by AI. In fact, they're already profiting off of AI, and they will continue to profit as software becomes the sole reliance on pushing AI across all landscapes. You have your LLMs, of course, but then you have these software companies that are going to come out and utilize the maximum contribution of using AI and agentic AI on their own platform. So sorry, Jefferies, but I think you guys are going to be wrong in this one. But when exactly are you going to admit you're wrong? Well, I'll tell you something. These analysts, they tend to go against the grain a little bit, or at least try to. But then once it starts outperforming, that's when they try to come back and they try to be bullish again. But we'll see what happens with that one. It is good to see that software is bouncing pretty considerably here. Of course, Cloudflare is up. I don't know why this one was down in the first place when all of a sudden it was like above $200 after earnings. But then it pulled back pretty decently and made a double bottom over here and bounced back. But we'll see. We'll see. We need to see some fall through on some of these charts. GitLab is down, of course. Datadog is down. CRM is down. But, you know, arguably these charts look a lot better. Looks like CRM is coming back at a test of 20-day moving average. But again, on the weekly charts, they're definitely not good at all. Cloudflare does have a much better weekly chart, but ServiceNow weekly chart is not looking good at all. So these really do need a lot of work. But a stock that is up very considerably today is Palantir. We heard news that Palantir was used for the attacks that we launched against Iran, in addition to Claude or Anthropic. And it's really funny because we have over here that the president's banning using Claude or Anthropic, and then they use it, right? So maybe software matters a lot more than people think, or at least what the analysts think on Wall Street. So we'll take a look at that one. Cybersecurity is coming back pretty nicely as well. CrowdStrike is coming back to the 100 weekly average. Rubric is coming back, but this chart needs a lot of work still. It definitely needs a lot of work. And you have a few of the other cybersecurity stocks coming back, but Zscaler is definitely still down there. And Shift4, actually, Jared Isaacman bought, I think, about $13 million or $1.3 million of a share. Don't quote me on that one. It was definitely a 1 and a 3. I just forgot whether it was 13 million or 1.3. I mean, just a $10 million difference. Like, who cares? It's not a big deal. All right. So some stocks that are still down. I don't know exactly why C Limited is down. So if you know exactly why this one's down, why don't you go ahead and share that in the chat so we can take a look at that one. Nubank is having a little bit of a bounce back, which is great, but those earnings are actually good. But of course, the market's going to attack fintech, and fintech is going to continue to be on fire until things actually do come back. But one thing that actually did have a little bit of a recovery today, which is really good to see, is Bitcoin. Didn't continue to go above 70K, but this is a pretty considerable bounce since last week. If I go here in the daily chart, it just looks like it's basing out over here. So maybe this is like sort of an accumulation phase, because you have your 4 stages, right? You have your stage 1, which is the accumulation, and then you have stage 2, which is the upheaval, and then you have stage 3, which is the distribution or the balancing out, and you have stage 4, which is the downfall. So maybe we might be in a stage 4 over here in Bitcoin, but of course, something like this could also happen as well. So let's just try to be patient with that one. At least I'm going to be patient with that one before I trigger some trades to the upside in that one. But yeah, definitely looking good. And one thing that's actually pretty interesting over here is that if I go to the S&P 500 sectors, you do have the outperformance of tech and the S&P 500. Unfortunately, XLY is down today. That's because Amazon and Tesla are down, which is about 40% of that sector on its own. But you do have IGV continuing to outperform semiconductors, or the SOX ETF. I'd like to look at this ratio over here, because it's been a continuous downtrend, meaning that SOX has been massively outperforming IGV for quite some time. If you know your math over there, you can kind of figure out why this is happening. But lately, you have today where SOX is basically flat, which arguably is a much better looking chart than IGV. But IGV is making a nice little comeback here today, and that's doing pretty well. KWeb, China Tech continues to underperform, so maybe that China trade isn't back yet, but we will see. Yeah, we're going to get a little bit into the reason why the drone stocks are down. Long story short, there was a report that came out, but we will take a look at that one. All right, so I did discuss I did discuss the IGV comeback. I want to get a little bit into the drone situation. So drones looked really good this morning. I said earlier in the segment, as drones were just rallying pre-market, and ever since yesterday, when the overnight markets open. And today we're seeing a little bit of underperformance intraday on the drone stocks, but still doing pretty well. I wanted to play this clip over here from CNBC for you guys so you can get a little bit from an analyst perspective, the reason why drone stocks are doing good. Let me go ahead and share this screen over here.
In Iran. Let's bring in Ian Bremer, Eurasia Group president, this morning, talk about what might be in store for us. Ian, good to see you.
Good to see you.
Curious how you're thinking about duration right now and scope as we keep an eye on some of these reports about, for example, strikes on Hezbollah.
Well, Hezbollah, I mean, the IRGC, the Islamic Revolutionary Guard Corps, Iran, have a great influence over what Hezbollah does. They have 2, essentially management seats, board seats, in formal governance of Hezbollah. So in some ways, the Iranians are making more of the calls of what Hezbollah is doing than they are with their own military units that they can't communicate with internally. One of the ironies of this war. But back during previous Hezbollah strikes against Israel, you used to see salvos of 40, 50, 100 missiles at a time. This was 6. So let's recognize that although it's opened the front, Hezbollah's actual capabilities are wildly diminished from what they were before. broadly on the war, Iran at this point looks like they probably have maybe 1,000 or below 1,000 medium and long range missiles left that they can actually engage in strikes with. And they used to never want to get below 1,800. That was like the absolute minimum to have a functional military. So they're running out. It's probably most a few more days of the Iranians being able to engage in significant missile strikes in the region, most of which get intercepted. But then it's drones. And the drone war, they'll be able to engage in for a much longer period of time. And the question of to what extent you're going to see interceptors, and are they going to run out? Because the U.S. can't maintain this level of naval presence in the region if they don't have interceptors boats to protect them. So I do think, well, as this war continues, yes, at a lower pace, but you could start to see more drones getting through. And, you know, on a daily basis, there could be some fairly significant attacks with casualties around the Gulf and in the Straits. Final point, Carl, is we haven't really heard from the Houthis yet. We've heard from Hezbollah, but in terms of what they might be willing to do to engage in strikes, to disrupt, to destroy tankers that they find in the Straits and beyond, that would be significant. And so far, that's been a wait and see.
Right. So is the key question about, I mean, you're right about the drone aspect, and they've got thousands left. Can they create enough havoc in?
Okay, so he's going to go a little bit on, or he went a little bit on with the with that one, but you can understand the bullishness when it comes to using drones or non-manned aircrafts in order to attack. You reduce your casualties, but also the precision, of course, is going to be a lot more extreme when you think about controlling a robot versus, you know, flying a helicopter, whatever it is, and the maneuvering capability and the smaller form factor can just make it a lot easier to attack a certain country or whatever it is. So I don't want to get political here. You know, I'm only here to provide stock news, whatever. So if you have any political comments to make, I'm not going to be here to make them, whatever, but, you know, feel free, but I'm not going to get into that. But I'm looking at this more from the stock market perspective, because of course we are a Wolf Financial channel. And I would say for the most part, war is somewhat bullish for the stock market. You have increased spending, which means increased budgeting for a lot of defense contracts. And on top of that, because you have to win the war, the spending will not only increase, but also all the suppliers for these government contractors are also going to win as well, right? So it's like, I mean, you know, it is bullish. I mean, more spending is just bullish for stocks in general, and that's what we saw in 2020, and we're probably going to continue to see it today. And that, in my opinion, is the reason why the market basically bottomed after its attack. We saw it last time when Israel attacked Iran. We saw it when the Ukraine-Russia war started, where the market basically bottomed on the day after that they attacked them. We saw it with Venezuela. We saw it with a lot of these other things as well. Conflict is bullish for stocks. And, you know, it does suck that innocent people have to die from both sides. You know, of course, the military, some people are going to die as well. But at the end of the day, you know, if you're about the stock market, these type of things was pretty much being priced in leading into the event. Now, what is it looking like after the event happened? And I'm going to get a little bit into the drone activity as well. Is there, you know, Lockheed Martin was up a lot yesterday. Okay, so if I go on the 10-minute chart here, I don't really like to do the intraday charts, but it's just easier to see it here. You have Lockheed Martin was up insanely this morning as soon as the market, or as soon as pre-market was open. Let me hide this one. Lockheed Martin was up. Yeah, it was up as much as 9%. And look, now it's only up 2.3%, right? And then you also have over here Raytheon, which is up more than Lockheed Martin. That's because they probably have a little more upside since it's not as large of a company. That was up 9%. Now they're up 4.5%. All right. ONDS was up a lot more. In fact, as soon as the market opened, ONDS just like ripped higher. It was up as much as 25%. And now it's only up 3%. KTOS was up a lot more. Actually, no, I don't think it was up a lot more, but it was also up a lot as well. It was up 12%. Nearly went red in the morning and now kind of floating out over here. There was one stock that was up 20% until something was released. Okay. AVAV or AeroVironment was up 20%. Now it's down 20%. What in the world happened? Well, I'm going to get a little bit into the fundamentals as to what actually happened on Wall Street. But I do think this is a little bit of an excuse for the real dump that actually happened. So let me go ahead and share. Oh, actually, I did have I lost it. Say no to trading. Posted about this one. I mean, he's certainly buying the dip. So, kudos to him. That guy's been doing pretty well with a lot of his swing trading. So, AeroVironment, AVAV, right? Why is AVAV and KTOS down suddenly, falling midday? The sudden midday drop in AVAV appears to be driven by a downgrade from Raymond James, which shifted its rating from strong buy to underperform. This stems from the U.S. Space Force's decision to recompete its Satellite Communications Augmentation Resource, or SCAR program, previously valued at $1.4 billion, representing AVAV's largest contract. The program, originally awarded to Blue Halo, acquired by AVAV, involves 6 ground stations with potential for up to 50 units, but was already under stop work order. The recompetition could lead to share loss or exclusion, impacting backlog growth and putting pressure on near-term revenue as order volumes moderate, competition intensifies. All right, so they had good earnings, but the stock, like I showed you earlier, is down 20%. Okay, guys, I don't think this is specifically tied to them form. Yes, of course, a lot of people listen to Wall Street and they invest based on what Wall Street says. That's what these analysts do. They're basically paid to do research on stocks, or I don't know, quote unquote, be able to gain more eyes on and so on. But this stock has been in an insane rampage since April of last year. And since it topped out around $400, it's basically 50% down, right? So leading up to the event, you have other stocks like like ONDS, which have made massive moves. And then as soon as the event happens, it rips up higher and then profits are taken, right? So in the stock market, this happens a lot. It's not just with these drone stocks, but it happens a lot, many times. I did a post about this yesterday, or actually I quote tweeted it yesterday. But basically, everyone's talking about how these drone stocks are up an insane amount. ONDS was up. Lockheed Martin was up. RTX was up. And I said, okay, so everyone's getting excited about these war stocks, these drone stocks and everything. They saw it up and everything. You definitely have some people chasing it into low liquidity overnight markets. And the problem with this is that when the event happens, that's when everything is already priced in. So more times than not, I'm not saying this can't happen, but more times than not, sometimes when everyone knows why something is bullish, there's no one left to buy, right? Or the people that bought much earlier are now getting out and selling into the rally. So it's better to not chase, right? Okay, ONDS is down. ONDS is up 3% today. So that maybe if you're a bullish thesis, it might make more sense, right? Wait for the price to come to you versus chasing the move. Unless you have really strong stomach, or what then and well that it might pull back, whatever it is, whatever your strategy is, maybe that works for you. But for me, I don't like to chase. And it's not because I don't like to chase because I know it's going to come down. I got burnt so many times on doing stuff like this, right? But then as I started trading a bit more, I started to notice this happens so many more times than when it doesn't happen, right? When you chase stuff, not only are you buying it probably close to the top, but also if it drops back, you might get scared and get out of the position if you don't have that conviction, because you see price coming against you, or your stop loss gets hit, whatever it is. But you're not the only one thinking this. A lot of people are thinking this. A lot of algos are trading this. A lot of fund managers are doing this. A lot of big time traders are doing this too. And when they get out, it might bring the stock lower because they're going to be selling out in size. So I got to say, you have to be careful. When I shared this post, we saw last week that EOS basically was down 40%, right? So I bought EOS or EOS Energy in the low single digits. And I saw the thing rip up higher, and I held on to it for a little bit. This is a trade. I think nowadays I find it very difficult to hold on to very pre-revenue stocks where you basically price in the future revenue, everything for a long period of time in size, right? So I play this with I played with this call options and I also played it with shares, and I got out around $14, and the thing continued to go higher as you can see in the chart. It was like around here where I tweeted out I might have made a mistake selling 4 or 5 times EOS at 14. Actually, this isn't a tweet; it was a reply to someone's post. And dude, I went through this, and I'm human too, right? Like this sucks. I was like, what? Really? Oh my goodness. It keeps on going. Comes out, okay, maybe I should re-enter. And then no, I'm not going to re-enter. I got to stick by my standards and not chase. And it goes back up to $19. And I'm like, oh shoot. And it comes down. I'm like, okay, maybe I re-enter. And I remember around here, I was like, okay, maybe this might be a good entry over here, but I just decided not to. It's like, you know what? Let me just move on. There's way other stuff to get into out there. And I did. I got into other stuff that didn't fall down 40%. And, you know, everyone makes mistakes, right? If you bought it over here and it falls down 40%, it happens, right? That's just part of the game. It happens. But something that Paul Tudor Jones always said is that it's better to be out of a trade wishing you were in it than a trade wishing you were out, right? How much would it suck to see this happen, chase it up here, and then it dropped down? And then now you're thinking like, I should have never entered this trade, right? And that happens so many times. Like that happens to me still. It happens to a lot of people still. Like no one avoids it. Like we're human. These are just emotions that happen. Like we can't suppress our emotions. Like there is not a single trader out there that suppresses all of their emotions. Like they feel it, but they just have the discipline to not act on it, right? Everyone feels these emotions. And the thing is that you just have to be disciplined to not do anything, right? And be confident in the long term or in the long game, where the game isn't about making like massive wins, like small, massive wins all the time. Like you might get lucky once or twice, but then you size up in the third one and then you give it all back, right? So let's say you caught EOS and you sold at 14, good job. And then you caught Navitas and you sold at like 15, whatever, good job, right? And you're thinking like, man, I'm like really good at this, right? So I can get like really rich with this, and I'll just like double the size on the next one. And then it doesn't come in your favor. It doesn't come in your favor at all. And then you get wrecked after that. You lose all confidence. You don't take the bets you're supposed to be taking, or you don't do the trades you're supposed to be doing. And then you miss a lot of stuff. And then you think to yourself like, you know what? I've seen a lot of these work. I gained the confidence back. Let me try to do this next one and give this one another shot. And then that one doesn't work. And now you're spiraling down after that. These are the things you kind of want to avoid doing in the markets. This is actually what we've been seeing in the stock market for the last like 5 months, just chop back and forth, back and forth, back and forth. And people get very excited when things go up after being on a crazy downtrend, right? Like think about software stocks. Software stocks are bouncing today, but if you look on the chart, it has had a terrible year still, right? And yes, it might come back, right? But what if it doesn't? You're going to get chopped up again. So like, it's kind of something you do want to build conviction in, because if you build a conviction in it, right, then you'll be able to withstand drawdowns. But if you don't build a conviction in it and you chase it like today, and then it's down like 5% tomorrow, you're probably going to sell. And that's something you have to be very careful about. You have to be very careful with chasing, because chasing never ends up well in the long term. No one has ever had a successful career chasing stuff, because one of them is going to hit you, and it'll be one that you likely size more than that. All right, so let's take a look at a few other things. We did go over the Steve Eisman. Actually, no, let's go over the Steve Eisman one. Yeah, that's right. I did not play that one for you. I want to go over what he has to say. He has a really good podcast, but I'm going to play this clip for you guys over here real quick.
Yeah, not a single trade. I think long-term, this is very, very positive, because it means the Middle East will be a lot, I think, eventually, hopefully,
not only is it not a negative, even with oil and volatility.
People react because of what's happening. Oil prices are obviously up. But if it goes well, 2 months from now, oil prices will be back to where they were.
No.
So you just said that they could absorb a lot more pain. This could take a lot longer. Are you kind of willing to do the same thing in the markets? Like, you just stay steady because you figure eventually?
I think, eventually we'll win. But like I said, this regime views pain, agony, and martyrdom as a sign of its own sacredness. And so when you view death as a sign of your own righteousness, you're willing to absorb a lot more pain. So it's going to take time.
So you wouldn't change a single thing you're doing in the market. What are you doing?
I've taken some risk down because I think the biggest long-term risk to the market is, I mean, there's this fear like all of a sudden people are going to stop buying NVIDIA chips. That I think is wrong. I mean, it's very, very clear given the fact that just 4 hyperscalers are going to spend $650 billion on AI infrastructure versus $450 billion that was spent by everybody last year, that NVIDIA's numbers will be fine for at least another year. The issue isn't does AI work? AI does work. The question is, are people going to make enough money at all this stuff that they're trying to create to justify the enormous amount of money that's being spent? And the problem right now is you could say whatever you want. You could say it's not justifiable, and I don't have a data point that could prove to you that that's wrong. Or you could say that it is justifiable. And you know, one of the nice things about my podcast is I get comments from viewers all the time, and I get both points of view. And the both points of view are written by people who are very sophisticated, who are in the industry. So we won't know probably for at least a year whether all this money that's being spent is justifiable or not. Until then, you could say whatever you want. And that's why I think the market gets whipsawed all the time. You know, somebody who put out that piece last week. It was like a fantasy about the end of the.
It was a firm I had never.
No one ever heard of them. And somebody put out like a science fiction fantasy piece about the end of the world because of AI, and people read it, and they said, "Oh my God!" And the market tanked. Well, I could write something that I could have written something like that too. But so what? It doesn't mean anything. It's all complete conjecture.
What does Jack Dorsey's move to lay off half of Block employees mean?
All right, so we have some news that came up over here. So basically, Iran's Revolutionary Guards commander says the Strait of Hormuz is closed. Iran to set on fire any ship trying to pass the Iranian media. And it looks like the market's completely reversed all of its gains earlier. I mean, this is a super choppy day, and I think we're still going to continue to see this chop over here. I mean, you know, yeah, it was great to see the market up and everything, but I mean, we're still in chop mode, right? So this is just, if I go on the daily chart over here on SPY, like this has just been this since October 10, right? This was the ultimate hammer down here. And since then, it's just been this, right? But still, it's still like slightly moving up, making higher highs, higher lows. But honestly, I don't know when this is going to break out. But there have been other stocks that have just been going straight up, like AOI is just going straight. I mean, we talk about a crazy chart here. But you know, there's some other stuff that will likely do pretty well. I'm in this one over here. I got a small position, AMPX. Also a few other stuff as well. But yeah, VIX was up as much as $25. But VIX is still just rallying up, right? This is a trend in VIX that you see over here. And every time it's like, oh, VIX is coming down, VIX is coming down, it's like, no, the VIX is just trending up. This is the kind of environment where you don't want to be doing like massive swings in options and stuff, because you don't know whether you're going to get a massive face ripper to the downside after a big move up. And we've seen that with the Qs when it was just the other day that like Qs was back here above the 50-day moving average, right? And then slams down, right? And then today we came back and we pulled back a little bit. So like, I don't know what's going to happen, but it looks like this 587 level in the Qs is going to hit at some point. Like, I just feel like you see this, like this is just, it looks like this is just chop. Look at the Qs over here, just nonstop, just up and down, right? So it's definitely a stock pickers market today. This is not something that you want to swing with like large calls. Like I've taken all of my calls off the table, or I think I'm like 5%, 7% calls in the portfolio right now. And today I'm fully allocated again, but this does warrant a time to not do massive swings to the upside with call options and leverage and margin, right? Like, it's just be mindful of what you're doing. And I gave a little bit back. I gave more than a little bit back over here. And, it's kind of sucks, but like, that's just the name of the game. Like, you got to understand what's happening here. And like I said, like, not everything is down, right? So let me just go to some positions of the portfolio real quick. All right. So Robinhood is doing pretty well because things are coming back. Zeta, I had an interview with the CEO last Friday, and it was a great interview. I'd recommend you all see it. It's posted on the Wolf YouTube if you guys want to check that one out, by the way. And also, if you're not already, go ahead and check out the Wolf YouTube channel, youtube.com/@Wolf Financial. Lots of great content on there. In fact, I think CES is supposed to be coming up next week. So there's going to be a lot of stuff that Wolf is going to have interviews and stuff over there. So go ahead and check that out. But it was a great interview, and I'm bullish Zeta. I really am. Like, I think it's a great company. I think that it's pretty undervalued today, but like, I also know that, look, if software comes back down, like, Zeta is going to go down with it. Like, there's no place in this world where if software comes down and makes new lows, that Zeta is not going to be brought down, because it is not because of the fact that I think Zeta is a bad company, but it's just, dude, look at the correlation between Zeta and IGV. It's like pretty much in sync around, like they've been like around here, right? So there's been periods of times where software is going down and Zeta underperforms software. And then when software comes back, Zeta outperforms. Like, Zeta is like a high beta position on software, right? The good part is that Zeta is not overvalued, in my opinion. I don't think it's trading like 20 times EV sales forward. It's trading at a cheap multiple, even on 2027 earnings as well. And again, check out the interview, build your conviction on it, right? Like, don't take my word for it. Build your conviction with it more than just watch an interview as well. But I definitely do think that there's going to be certain beneficiaries of this when software comes back. And there's certain companies where I don't think that they're going to be a massive beneficiary. Like, I don't know with Salesforce. I think they're buying a lot of the growth inorganically. And I think they're a very mature company, and they're not going to come back and make like 30% growth. That's not Salesforce unless they buy it. And even then, I don't know what they're buying that's going to accelerate their growth by 30%. Right? So you got to kind of be a little bit careful here buying stocks that just like keep going to the moon. Right? So you don't want to chase that. What's my average Zeta? Well, I mean, it's like right on my average. I think it's like about 17.5 or less, somewhere between like 16.5 to 17.5. I forget exactly, but yeah. GTC. Oh yeah, you're right. GTC, not CES. You are correct. Yeah. We're going to be dead in a year. I mean, I feel bad because, like, obviously you're kidding around, but we got to remember, like, there's actually people out there that don't want the war, but are getting hurt by it. Again, it's mostly the innocent people that, that it sucks to be like caught in the crossfire in that situation. Oh, wow. Look at that. Amcor's green today. That's good to see. And on semiconductor. Oh, ACLS is coming back. It's nice to see recovering the 100-day moving average. Yeah. So let's move on a little bit. I don't want to focus too much on certain things. We don't have too much time here. Actually, how much time am I on? 33. Okay. All right. We got some time. All right. Conflict. OpenAI takes advantage of Anthropic. Right. So we had a little bit of stuff happening last week with Anthropic. I wanted to play this clip for you guys just to get brought up to speed here with what's happening with Anthropic. This is from CNBC. Let me go ahead and play this one.
The Department of Defense now striking a deal with OpenAI to use its AI models. The company stepping in after the president ordered the government to stop using Anthropic, their main competitor. Our Deirdre Bosa is live outside of Anthropic's headquarters in San Francisco for today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So there are fresh chalk messages of support out on the sidewalk here and in front of OpenAI headquarters. That is new because the story is still moving very quickly. Just in the last hour, Treasury Secretary Scott Bessent announced the department is terminating all use of Anthropic products, saying, quote, no private company will ever dictate the terms of our national security. So this is now spreading beyond the Pentagon. The administration is making an example of Anthropic across the federal government. Anthropic, for its part, says that it will challenge that supply chain designation in court. And yet, the backlash is going in the other direction here. Over the weekend, Anthropic's Claude app, it hit #1 spot on the App Store, dethroning ChatGPT for the first time ever. So OpenAI may have won the government, but Anthropic is winning the narratives with consumers and developers so far. But this is far from over, because at its core, this is about who should decide how the most powerful military on earth uses AI, an unelected CEO in San Francisco or elected officials and the laws that they pass. Now, a source familiar with the negotiations tells me that the real deal breaker for Anthropic was the surveillance piece of this. The Pentagon wanted to use AI to analyze bulk data on Americans. The current system, it shows where you've been, but add in AI and that becomes a lot more powerful. It can predict theoretically where you are going. OpenAI's deal only restricts private data, not this kind of publicly available data. And all of this matters because now the template for every AI military deal and what comes after it. This is sort of set the precedent. And it could also be a playbook for the labs as models are increasingly becoming commoditized. Anthropic is essentially building a moat based on values, not benchmarks. And across town, guys, OpenAI employees, they are heading into work this morning as well. They are being greeted by fresh messages on their sidewalks as well, against the deal that Sam Altman signed over the weekend. And what's interesting, too, is a lot of the messages on the sidewalk there are directed towards OpenAI employees, asking them to use their voices and call out what's happening. And remember that nearly 100 of them signed a letter before the weekend backing Anthropic's position over their own company's deal. So how Altman responds to them may tell us a lot about what comes next.
Dee, it's one thing for the Pentagon to cancel your contract. It's another for them to then say, oh, also, you can't do business with any of our other vendors. On Friday, critics called that a form of corporate murder and wondered if it would have a chilling effect on tech's willingness to do business with the government.
It's such an interesting debate right now, right? It's who makes this call? Is it the government or is it a private company CEO? And that is certainly the part that Anthropic is challenging, saying that they're going to challenge that supply chain designation in court. And it's very split right now. I mean, OpenAI, Sam Altman, he saw the opportunity to take this deal. It's a $200 million Pentagon deal. But like I said, Anthropic is kind of winning the narrative here because the fact that they're willing to walk away from it tells, corporate America in particular, that they have a great model that the Pentagon wants, but now they're replacing or trying to replace, and two, that they will walk away from things based on principles. And that could be powerful. We're seeing that it's powerful with consumers already, and we'll see how this shapes up during the day because I think the employee piece is going to be really interesting. We've seen this in tech before with Google and government contracts. This is now playing out in the AI era where the stakes are arguably much higher.
Yeah, as Claude goes to #1 on the App Store. Dee, thank you very much.
All right. So what do I think about this situation that's happening here? All right. Clearly, we've had some issues here between Anthropic and Anthropic and OpenAI. Right. So Dario, CEO of Anthropic, did come from OpenAI originally, but then he fled and he started his own company. And now him and Sam Altman have some beef with each other, probably going a long time. We all saw the video when they're in the India AI summit and they refused to hold hands with each other and so on, whatever. Like they're clearly in competition, right? OpenAI is valued more than 2 times of Anthropic, but Anthropic is catching up pretty quickly. And also we do hear about the Oracle CDS spreads, which are nearing the widest since 2008, which means that the insurers need more premium in order to finance the debt from Oracle, because most of their backlog has come from OpenAI, and the market's not necessarily looking at OpenAI from a good side, right? So OpenAI is clearly trying to take the cake from Anthropic while they have a chance, right? So they're obviously executing in that form so that way they can get more business and hopefully eventually overtake Anthropic. But Anthropic didn't want to take these government contracts for a reason. They didn't want the government to control their business, and their models are obviously doing very well, and they want to take that standpoint. We've seen Anthropic take this standpoint where we don't want ads in our platform and so on. Then obviously OpenAI is monetizing the ads. So it's a little bit of a different company, but two arguably are two very good models, and things are starting to get a little bit heated there. But I don't think this is necessarily going to end anytime soon. I think we're going to continue to see a little bit of back and forth where the tennis ball goes from one side of the court to the other side of the court, and there'll be a lot of back and forth. So it's a good thing these stocks don't trade publicly, because if they did, it would be super volatile. But one stock, two stocks that are probably benefiting off of Anthropic's rise in premium is Amazon and Microsoft, right? So Amazon and Microsoft have legs in both OpenAI and Anthropic, but it was good to see a little bit of upside in its balance sheet from the stake that they do have in the company. But at the end of the day, I feel like everyone's going to win the situation, right? Like, competition's healthy. I think competition's healthy. If you had a monopoly here, then I don't think you really see much progress in terms of trying to get better. Competition will be able to supply that growth for both companies in order to make their models a lot better. So that's why competition is generally healthy in any environment. All right. So what else do we got here? I did talk about that. All right. So I think that really wraps it about it. I mean, the markets are just chopping back and forth here, guys. I wouldn't really pay too much attention to the intraday moves in the market. In my opinion, you saw the move this morning, and then you saw the move that happened shortly after the morning started where the market went green. They're kind of chopping around here. I wouldn't be surprised if we're just going to basically stay in a massive range for this whole week, you know, and the range is pretty big. Like, you already had the beginning of the week over here kind of setting the upper part of the range, and now you have like a 1.5% range to play with on the Qs, and SPY is probably just going to, just recover the 100-day moving average over here. And this is pretty important to sustain this 100 moving day average. And I mean, I feel like this is just going to continue to bounce back and forth here. So I wouldn't really try to get too involved in this one. Just keep doing your research and keep trying to find the stocks that are going to win in the long term. I would like to find another one. I would like to find one of these guys, but unfortunately, I didn't get in on that one. I wish I had, but we will see. We will see, guys. All right, so that does it about it for today. We have a few earnings reporting this week. Actually, let's go ahead and bring up the earnings calendar over here. Right, so we have VG reported this morning and NextDecade reported this morning, and those stocks just like ripped to the upside. I think this is, of course, it has to do with their earnings. Actually, oh, wow. NextDecade did pull back quite a bit from its high in the morning. Actually, no, that's a weekly chart. No, that is a daily chart. So I'm looking at the chart over here. I don't want to bring it up. I just want to keep this open. Yeah, it dropped about 12% from its high today. VG is still up pretty high, back up the 200-day moving average. So congratulations if you got in VG there. EchoStar reported earnings this morning. They didn't really. I mean, they're up like 2%. Norwegian Cruise Lines reported this morning. So after close, you're going to have ASD Space Mobile reporting, Big Bear AI, Archer, Credo is reporting, Riot. Actually, Riot reported last week, I thought. MongoDB is reporting, another software stock, Plug Power, QUBT. You have Ouster, LiDAR Technology is reporting as well. Oh, yeah, my bad. This is a little too small to read for you guys. All right. And tomorrow morning, you have Target C Limited reporting. That's actually pretty interesting, the setup that C Limited is having into earnings. I do wonder what's going to happen here if C Limited massively rallies tomorrow after pulling back pretty decently today. Well, let me check something real quick. NCLH. Oh, they're down 10%. That sucks. They just gave up all that move. Battery Technologies reporting tomorrow. CrowdStrike tomorrow afternoon. Oh, that's gonna be an interesting one to watch. GitLab, QSI, bunch of other stuff as well. Wix reports Wednesday morning. Oh, Abercrombie and Fitch is reporting. I wonder, is that the Sydney Sweeney one? Yeah, that is a Sydney Sweeney. What? No, is it? No, wait, maybe it is. I think they had a split. They might have a reverse split. I don't know. Sydney Sweeney, ANF. Is it ANF? Abercrombie. American Eagle. That was the one. Yeah, this is Abercrombie and Fitch, so that's not the one. Genie's reporting. Oh, Broadcom is reporting Wednesday afternoon. That's gonna be an interesting one. We'll see what happens if they hopefully they come back in that one. Okta is reporting. Weeble's reporting. Another quantum computing stock. RGTI is reporting. JD on Thursday morning. Not really much. Victoria's Secrets. Thursday afternoon is going to be an interesting one. Costco reporting. Samsara. Marvell Technologies going to be reporting. I wonder what Marvell is going to do as well. I might take a look at that one actually. And then yeah, that's basically it for the rest of the week. All right, guys. So that about does it for today's stream. Really appreciate you guys for joining this one. If you did get a chance, go ahead and subscribe to the Wolf_Financial YouTube channel. Check that out, or you can check out my channel as well. You guys already know what that is. And go ahead and watch the Zeta interview with the CEO. That was a very good time. Looking forward to doing more interviews with other CEOs of other companies. So I'm going to be doing some reaching out on my own. I do enjoy doing these, and those some other figures in Wall Street as well. Definitely understand why Amit and Steve enjoy doing these interviews with a lot of these famous people. It is very interesting to hear like the human perspective. Like these people are still human, right? They're not mechanical robots that don't exist in real time. Like these are human beings, and it's good to hear. It's good to hear the other side of it that you usually don't hear in Wall Street, and also like their thinking, how they came up with their company, their background and stuff. The stuff that you don't usually hear, and I want to bring that more to you guys. So really appreciate you guys tuning in here. Have a good one.